What's up, everyone? It's Karthik with Moneyvest. So welcome on board for our Market Open live stream where we also cover CPI. So inflation numbers are coming out in less than 30 minutes. So it is CPI Wednesday. And we also have the deadline today for all institutional investors managing over $100 million to report and file for 13F filings. So we're also going to be learning a little bit about what they have been doing in the second quarter. What are they buying? What are they selling? All that good stuff. So hope you are doing great. And if my audio and video is good, just give me a thumbs up. And just want to make sure that everything is working well here. And the markets, after a very, very strong rally from yesterday, are essentially flat going into the CPI print. We've got QQQs up just over 6 basis points. We got the S&P 500 up over 4. And of course, individual stocks, NVIDIA is up over 1.9% at the moment, with Tesla also up over 37 basis points as well. MSKMO504 says, I always feel calmer waiting for these reports when you're live, Karthik. Yes, it is going to be quite interesting for us to take a look at the market's reaction and what the report essentially is going to be. Let me know in the live chat. We've got a poll going on right now. If you're expecting inflation numbers to be above 3%, below 3%, or at 3%. So that's about 2.98% to be precise. I'm going to go over that calculation here in just a minute as we have more people joining us in. We're going to be taking a look at the overall CPI numbers and, of course, the calculation for that. So, again, thank you so much for joining, everyone. Really appreciate you all. Cotton Chef, do we want the CPI to be higher or lower than expected for the markets to go up? What are people expecting? So we want CPI numbers to be lower than what the markets are expecting because that is going to be a beat on consensus, which is going to create this more momentum to the upside. It's going to create more openness to rate cuts, and that is good for the market. That's quantitative easing is what the Federal Reserve is going to start in September, and that's exactly what the market's going to be responding to really well. So that's what we want. Above would be catastrophic. No, yes. So above that would not be necessarily catastrophic, but it would be kind of moving in the wrong direction. We don't really want to move higher in inflation once again. So I think the best way to illustrate this point is through this spreadsheet. And I actually want to make a huge correction. So in my last video, when I broke these numbers down, I made a mistake of not essentially calculating for the forward 12 months. So what I did originally was that I had dollar signs over here, meaning on these sort of cells, when I was calculating this formula, I had dollar signs, which I then copied all the way down. So you'll notice that it was all 2.97% if you go back to my video, which obviously cannot be the case, right? That is incorrect mathematically. So I adjusted for those numbers, and this is the actual now final report, or essentially the calculation for CPI moving forward. So what we have here is, let me just explain very quickly before we jump into some of the comments and some of the CPI numbers and all that good stuff. But we've got the CPI index. Now this is the index value, just like you've got the S&P 500 index. CPI also have an index value, right? This is the basket of goods and services. And I've been tracking this since 2020. You can go back and track all the way from 1950s, but I pretty much decided to track for the last 4 years. From 258, just under 258, we are now sitting at well over 314 as of June. So the June report that we got in July, we were at 314.18. That was the number for the index level for CPI. So we have the month over month. Obviously, this is nothing but a calculation of the current month versus previous month. So we got the month over month, and then we've also got the year over year inflation, which is calculating for the change over 12 months. So we got the month over month here. We got the year over here. If you come all the way down, you'll notice that we actually witnessed no change in June compared to May because of seasonality adjustments. We only saw 0.03% increase, and we are sitting on a year over year basis at 2.97%. To be precise, rounding up, that's 3%, because if you come over and round for only 1 decimal point, we're at 3%. 3.3 for the previous month, 3.4 for the month before that, and 3.5 for the month of March. So these are the 4 most current values. We can also validate from the BLS website. So if you come over here, take a look at charts, come over to this 20 years worth of data. And if you simply come over here, zoom in a little bit, you'll notice 3% for June, 3.3% for May, 3.4% for April, and 3.5% for March. And that's exactly what we have on this spreadsheet: 3.5, 3.4, 3.3, and 3%. So again, we've got 2 decimal points, so that's why they are these numbers. So moving forward to the upcoming report, and this is the monthly change. So what you have at the very top are the monthly changes. So if we see 0.2%, and that is what many investors and analysts are expecting. So if you come over to this report, the median expectations for inflation is at 0.2%. That is headline CPI, as you can see, median forecast 0.2%. This is all from different banks. We've got Barclays, BNP Paribas, Bank of America, Citigroup, Deutsche Bank, Goldman, Jefferies, Morgan Stanley. On a median basis, they're expecting 0.2%. And for year-over-year at 3%, which again is only 1 decimal point. If we include for multiple decimal points, we're going to be looking at 2.98 to be precise. So this right now is what the markets are pricing in at this very moment going into this print. This is the expectations from the market. 0.2% increase month over month, and for us to sit at 2.98%. If we get a 0.1%, which is better than expectations, we're going to be coming down to 2.9. Which again, you'll notice that many people actually do have that expectation. So if you take a look, some analysts are expecting for, let's say, 0.14. You can see that here. So that's 0.14, expecting for 2.9. 0.13, Nomura expecting for 2.9. 0.17, expecting for 2.9 also. So all these are 2.9 expectations for a lower month over month change. So that is also possible, of course, if we come in 1.1%, or if we increase this to 0.15, we're still going to be around 2.8% for that particular index. So that's where we are for the expectations going into this print. And what this also shows you is the overall next 12 months worth of expectations, considering what the average month over month ends up being. So for example, in the next 12 months, if we see an average monthly increase of 0.1%, then we've got a path down to 1% inflation over the next 12 months. If we see no change whatsoever in inflation, CPI index stays where it is, then eventually over the next 12 months, the inflation number is going to come down to 0.03%, pretty much 0% on a year-over-year basis. And if you do see deflation, if we just reduce inflation by 0.1% every single month, then we're going to be below the Fed's target by September. And that is what the Federal Reserve is going to really be hoping for, is that we come down to under 2% by September. We only really need 3 more readings. Today, August, and September. So today, August, and September, 3 more readings for us to come down to under 2%, which is the Federal Reserve's target, if and only if we can see 3 consecutive months of deflation. That is negative 0.1% month over month. And the interesting thing is that we actually did witness that in the last month, if you account for those seasonality effects. So if you come over to the PDF, this is from June 2024, you'll notice that we actually saw a decline of 0.1%. So we actually did witness deflation in the US with regards to CPI on a month over month basis. And as a result, we saw a significant decline in inflation from May to June. But we're still within well within range. Over the last 1 year, we've been around 3 to 4%. And that's really where we have been. So this right here is another chart that is showing us where the overall CPI has been over the last 1 year. It's been somewhere between 3 to as much as 4%. We haven't really broken below 3% in a very, very long time. Okay, guys, do me a favor. Share this live stream with your friends and family members or investors and traders in WhatsApp channels, Discord, Telegram, Facebook, MySpace, Orkut, whatever you use. Share the link to this live stream so more and more people can join us as we look at the CPI numbers live and take a look at the market's reaction as well. So I would really appreciate that. Helps our community grow, helps more engagement, helps more people join, more participation in the chat. It's going to be beneficial and helpful for all of you, and more data for us to analyze in the polls as well. Right now, we've got over 205 votes. We're trying to get to 500 votes before the CPI numbers come out in the next 15-20 minutes. So do me a favor, drop a like and share this live stream so we can have more people join us during this market open, as inflation numbers are scheduled today as well. It's going to be very, very important CPI print. Yes, Premier League will return on the weekend, so I'm very excited to start once again. Watch United, of course, not Liverpool. Really, just my two favorites have always been United. Of course, I'm the biggest United fan, and also Arsenal. I feel like Arsenal deserves a title. I think they have been ripped a couple times in the last couple of years. They've come so close and they've dropped the ball at the end. So United, if not United, then definitely Arsenal. Definitely not City, though. Okay, Mike, I find the live to be more adrenaline rush. Good day all. Good morning from Athens, Georgia. So that is great. Thanks so much for joining. Let's see. If it's the same at 3%, then we're going to be on par with expectations. I don't expect the markets to move a lot. We're going to take a look at some individual items and where that inflation or disinflation is coming from. But right now we're still well within disinflation, where disinflation is just the rate of increase coming down, but deflation is going to be prices actually going down on a year-over-year basis. Vault says, Caddy, if CPI will be reported lower than 3%, example 2.9, are you going to put your dry powder to work today, or maybe wait for power hour to see what the market's going to do after digesting the info? So if you come in at under 3%, I could see myself doing some buying today. We're still off of highs. Nasdaq's down still over 8% from its all-time highs. If you come over to our market snapshot, you'll notice that the Nasdaq is still down over 8% from its all-time high, so still well within a pullback. S&P is back in a dip, down over 4%, and the Dow Jones under 4%. So I could see myself deploying a little bit of capital, and I'm going to be more interested in some leveraged ETFs. And yesterday's gain kind of stung me pretty hard because I did get out of FNGU on Tuesday. On Monday, and then Tuesday. Yesterday was Tuesday, right? Yeah, so we got a big rally yesterday from the markets. So had I held on, that would have been a nice 7-8% day for FNGU. But oh well, right? You can't really time the markets in that sense. So I'll be looking at more SOXL, TQQQ, FNGU, like those types of leveraged trades for a short to medium term. I like to hold them anywhere from a day to as much as a few weeks. So that would be the idea. If we come in better than expected and the markets are starting to rip higher, that's going to be the trade idea that I'm going to be formulating, and I'll share with everyone in Discord. What is the expected move if we are below expectations, and which stocks from our favorites would see the biggest upside move? So if we come in below expectations, so if we come in, let's say, at under 3%, so right now, like I said, the market's pricing in for 0.2%, and 2.98 is the expectation for CPI in the next 13 minutes. If we come in lower, anytime, any over here, sort of like all of these sales in rows, then I'm expecting the markets to be up at least 1%. That would be kind of like a minimum. And for individual stocks, more specifically Magnificent 7 and technology, to have another really strong day like we did yesterday, because we are also positioned a little bit more on the call side than on the put side going into this CPI print, because we also do track the PCC, which is the put call ratio. And this is what I shared with everyone. This is what the Moneyvest dashboard looks like right now. And you'll notice that we've got the put call ratio going into today, which was at 0.96. And this was actually at just over 1.1 at some point during the day yesterday. So we had more put options against call options on the S&P 500 during the day, but towards the close, it dipped back below 1. Which just goes to show that, institutions and whales and just buyers in general are betting for a optimistic and more positive report today, because they are betting on, again, they've got more calls than puts on S&P 500. Moneyvest index stays at 3.56. I'm going to update this number as soon as the markets open. Volatility continues to be low 18s. We are in the median zone, about 52 percentile. And the contango level that last time I checked was less than 0.5% in negative. And some of the other indicators, market breadth indicators, still well within 45 to 54 percentile at the moment. So median values for a lot of these indicators at the moment, about 11 minutes prior to the inflation numbers. So 479 people. We got 290 votes. We need 210 votes more to get to our target. So make sure that you do participate. What are you expecting for inflation numbers to be? Above, below, or at 3%. So do participate in the poll. We'd love to see you participate. Okay. The prices in Costco have not gone down a bit. Not sure how the CPI will go down. Dilip says, yeah, I mean, energy prices are also very, very elevated, right? So they haven't really come down. In fact, oil prices have started to move back up again. You can notice that we bounce off of that $72, $73 a barrel. There's also a lot of tensions in the Middle East. I was reading more about it with Iran to potentially retaliate against Israel. So we haven't seen that yet, although there is some new changes in power and in the office over in Iran. So that, again, will keep you guys posted with where we are with that as well, because that's going to be affecting the oil prices as well. Puts on Apple, calls on VIX. Johnny says, man, do it at your own discretion and your own risk tolerance. Liverpool all the way. By the way, any insight on Etsy? We'll take a look at Etsy here shortly. I'm a Tottenham season ticket holder. We cannot be friends anymore if you like South Londoners. Oh, man, I feel sorry for you. Tottenham, I don't know. It takes a lot of courage to support Tottenham or any other club that hasn't won in many, many years, including myself being a United supporter without a major trophy since, I would say, 2013. I mean, we did win the FA Cup, to be fair, but no Premier League. I mean, the last time Premier League was 2013. And actually, that was the year that I actually saw Alex Ferguson and saw United in that particular year. That was the last season for Alex Ferguson. I watched him in his prime, and then, my life is fulfilled in that sense. I was able to see Sir Alex Ferguson when he was in charge. So CMG, we've got to take a look at CMG as well. Chipotle, I'll take a look. How about above 3% caddy? We will see reds all across. So 3%, above 3%, yes, there could be some potential downside, and we could erase some of those losses from yesterday because, it's all dependent on one thing. The expectations are for rate cuts or rate increases, and a stronger than expected inflation report is only going to, once again, reiterate the possibility for rates staying where they are, steady, and of course for us to not see as much quantitative easing as what the market's pricing in for. Right now, the market's pricing in for a full 100 basis points in rate cuts, which is, in my opinion, very, very optimistic. And this spreadsheet also shows us what the Federal Reserve is not going to do. Meaning, so this first spreadsheet is essentially showing us where inflation could end up in the next 12 months if we are to see any of these monthly increases. So again, to put things in perspective, if we see 0.2% every single month for the next 12 months, inflation is going to come from 2.97 down to 2.26. So we're going to be sitting right over there at 2%, 2.2% by May of 2025. But this right here is another spreadsheet which shows you the level of real interest rates. Real interest rates meaning with the federal funds rate and the CPI, headline CPI. And the last thing the Federal Reserve wants to be is negative. We don't want interest rates to be negative. And that's where we were back when inflation was at over 9%. Interest rates were in the 3s, 2s, and 3s. And as a result, we had negative interest rates during that time. And so borrowing was really, really cheap. Inflation was extremely high. So the Federal Reserve really wanted to get above the inflation rate. And they did. They are there, right? So 5.25% is the current federal funds rate. Inflation's under 3%. So right now we're sitting at a positive 2.28% for real interest rates. So this essentially shows us where the Federal Reserve does not want to operate. And that's going to be these levels over here, which are essentially showing us negative real interest rates. It's a very, very small section where the Federal Reserve would not want to be in. And that's going to be all of these areas. Because at that point, we've got the federal funds rate, which is lower than the inflation rate. And that risks inflation accelerating back up. So that's where we are. Anyway, so we got about 7 more minutes. 7 minutes for CPI numbers to come out. We got almost 600 people watching and 369 votes. Folks, quick. 130 votes. Participate. We've got the poll going on up top. So let us know. What are you expecting? Above 3%, below 3%, or at 3%? Yes, Chipotle had a dump. CEO exiting for Starbucks. Starbucks definitely poaching the heck out of Chipotle. And I feel like the selling pressure was pretty brutal yesterday, and Starbucks had a very, very strong day, up over 21%. Chipotle was down over 7.5% yesterday, and Starbucks was up 24%, over $95, pushing up to those levels for Starbucks here. Yes, so we discussed that in our Discord. Chipotle dropped because one of their officers, if not one of their officers, they're quite literally their CEO, left to go to work for Starbucks here. And the news, of course, came out yesterday. So very, very significant drop. And, of course, Starbucks doing much better, up over 24.5%. Nice haircut for the new era, to the moon. So, again, we'll take a look at what those CPI numbers, inflation numbers end up looking like, and how does the market respond to those numbers. So we're going to keep QQQs over here on the 5-minute chart. And we'll put the SPY over here on the 5-minute chart as well. 5 minutes left, folks. 5 minutes left. 414 votes. Come on, guys. We can do it. We can do it. We need 85 votes to get to over 500. We've got 600 people watching, so it should be fairly easy to do. Chirag says CEO went from selling burrito bowls to selling coffee beans now. So Zedric, it comes out at 8:30 a.m. Eastern. So in about 4 minutes, we got 4 minutes left for the CPI numbers to come out. And you can check the numbers for yourself on bls.gov. That is the government website that you can check. And under subjects, under CPI, you can click on that and it shows you the next CPI data is scheduled to release on August 14th, 2024, which is today at 8:30 a.m. Eastern. We're actually going to be opening up an incognito because of the cache issues, and sometimes the data does not load or does not update the PDF. So here we are. I'm going to open the chart here. Okay, we got 40 votes. 40 votes. Come on, people. 4 more minutes left. 10 votes per minute. We got there. 461, 462, 464. Come on. 500 votes is what we need. So right now, majority, 45%. People are expecting CPI, headline CPI, to be below 3%. We got numbers coming out in 3 minutes now. 3 minutes. None, yes. I do have a position in PayPal. Not doing super well, though, on that position. Berg says calling it at 2.8. So 2.8%, meaning that we would need to see either a no change on a month-over-month basis or 0.1%. That's going to put us roughly around 2.88%. Okay, 3 minutes, 485, 487. We're very close. Participate if you're just joining us. And 495, 5 more votes. And 498. We are there. Boom, I'm going to close the poll here at 500. Perfect. I closed it exactly at 500 votes. So if you participated, thank you so much. You're going to see the results now. 504 votes with 45% of you expecting CPI to be below 3% on a year-over-year basis, 31% at 3%, and 22% above 3% expectations. We got the QQQs over here, flat prior to this report. SPY, absolutely flat prior to this report. And numbers are going to be scheduled at 8:30, so 2 more minutes. 120 seconds, everyone. 120 seconds left. Who is ready? Who is ready? If you expect the markets to rip, type 1. 1 for markets ripping after the report, 2 for a markets sell-off. So let me know. 1 for markets ripping higher, 2 for markets coming down. Comment in the chat. What are you expecting? 1 for rally, 2 for sell-off. Let's see what the expectations are. Got a minute 15 here, folks. Minute 15. Sure, we can have a lot of data coming in. Right, markets are moving a little bit. 60 seconds. 60 seconds left. About a minute left here. Let's take a look. We got over 800 people watching. We're ready. We're going to reload this page as soon as these numbers come out. And the main focus is going to be on what is the headline. And of course, take a look at some individual items as well. We got QQQs flat, SPY flat prior to the report, 40 seconds. And we are ready for inflation numbers. We'll see if we see a repeat of yesterday or not, or the markets are going to take a bit of a dump. And we'll come back to our spreadsheet and take a look at some of these seasonality adjustments and the overall grid as well. Here we go. Here we go. About 30 seconds. Very, very flat. Already starting to move some algorithms here. 10 seconds. We'll reload this page for 814. 814, and here we go. So let's see what numbers we get. So CPI, reloading. So July, we got 0.2% increase, and it comes down to 2.9%. So that's where we are. Markets should be ripping as they are. QQQs are up 16 basis points. SPY's up 19, 20 basis points. And if we scroll in a little bit further, we're now sitting at 2.9, down from 3. This is not really 2.9. I mean, it is going to be a little bit lower, 0.2%. So we're closer to, on a seasonality adjusted basis, about 2.9%. And of course, that's where we have 0.2%, which is on par with expectations from the market. So 0.2% increase in July, 2.9% on a year-over-year basis, and all items as food and energy. So core coming in at 0.2%, year-over-year 3.2%. So we came in on par with all expectations. Month-over-month for headline and for core, year-over-year for headline and for core, on par with expectations. However, we did get a small beat on headline year-over-year, came in at 2.9%. Versus 3% expectations. Market's reaction is a little bit more muted, so 0.2% to the upside for QQQs, and SPY up about 12 basis points. And if you take a look at shelter prices, up 0.4%, so year over year, sitting at 5.1. And then we've got used vehicles and cars, new vehicles down 0.2%, used cars and trucks down 2.3%. And then we got apparel down about 0.4%, medical care commodities 0.2%, services less energy up 0.3%, and energy overall was basically flat on a month-over-month basis, and year-over-year still in deflation. So if you come over to some of the charts here, let's take a quick look, and we are sitting at 2.9, like I said, for year-over-year. Over here, and then if you take a look at core, we've come down to 3.2. That's down from 3.3%. Shelter prices also heading lower. Every single month, we are starting to see that 5.2, 5.1 now. And then new vehicles now negative, or they have been negative for some time, now down 1% on a year-over-year basis. Then we've got, let's see, food at home or energy prices back above the 0% line. So 1% higher on a year-over-year basis, but still, of course, relatively low. So they have already done their part. And food here now starting to stabilize a little bit around 2.2 to 2.1% at the moment. So market's reaction, a little bit more mixed. Not really seeing a lot of momentum, but we are starting to see a little bit of that pullback. So yes, this is not deflation. It is disinflation. I think we need to be very careful with our wording because deflation would be prices going down on a month-over-month and year-over-year basis. But disinflation is simply the rate of increase coming down, the rate of growth starting to slow down here for overall inflation at the moment. Let's come down a little bit, take a look at some other categories. So this is where we are for July 2023. All items, we are sitting at 305.691. So that is for July 2023. July 2024, we're sitting at 314.540. So we can plug that number in, 314.540. And that's where we are on a year-over-year basis at 2.9%. 9%, and on an unseasonal adjusted basis, 0.12%. 314.175, 314.175. So yeah, there we go. That's the June and July month-over-month reading. 2.9% is where we are on a year-over-year basis compared to where we were same time last year. So that's where we are. A little bit of a mixed sort of reaction from the market. We went up, came back down, but we are really just flat. There's not a lot of momentum from the markets here. Let's take a look at some individual stocks. So Tesla, pre-market on this report, it was higher prior to the report. After the report, it's up about 25-30 basis points. We've got Nvidia, which was up over 1.5%. It is right now up over 1.3%. So still green very nicely. Let's take a look at our Magnificent 7 index. So this right here is all the Magnificent 7 index. All stocks combined, basically flat, down about 11 basis points. And so the market reaction is not a good sign. We should be fighting higher with that reading. We might close red. Yeah, I mean, that's one of the things that I think the market's kind of already priced a lot of this information in yesterday. We did come in on par with expectations. However, only one thing that we actually beat, which was the headline CPI, coming in at 2.9% versus 3%. So we came in below expectations for that. So this right here is the overall report, 0.2% versus 0.2%, so on par there. 3% expectations for CPI year over year, came in at 2.9. For core, 0.2, 0.2, 3.2, 3.2. So only one beat out of 4. So that in itself should be slightly more bullish for the market, but we are starting to roll over just a little bit. And that just goes to show that even if good news is not good enough to keep momentum going, then the market's overall sentiment is not bullish. It is a little bit more on the weaker side. So, but you never know. I mean, intraday, there is possibility that we do start to move back higher, and there is some momentum, some continuation from yesterday. But we're going to have to wait and see if that happens in the next hour once the market's open at 9:30 as well. So that's where we are at the moment with some, I would say, pretty okay and decent inflation print. Let's just go over to some of the comments now. Markets ripping. Not really ripping. I mean, they are slightly down. And let's see. Sell the news. Yeah, so not really showing CNBC on the inflation read. We can break that down on our own on the BLS website. Let's see. I was in market to crash to be able to get into it. So yeah, so I'll be looking at some leveraged ETFs that I think are going to be super interesting. So for example, what I'm really watching today are SOXL, having a very strong day yesterday. This is one that has the potential to be day traded really well. FNGU is another one that I had a swing trade on from last week, slightly down about 20 basis points, a very strong momentum yesterday, up over 9.4. And then of course also watching TQQQ, which is up over 7% yesterday, slightly down pre-market. So these are the 3 levered ETFs that I will be watching on the day today. IWM up over 0.5%. So IWM seems to like that very much. Small caps and TNA should be higher even more, up a little bit over 1.3%. So very, very nice move for small caps, leveraged small caps. So yeah, that's where we are. Pretty decent report, I would say. We'll take a look at the expectations from the market as well, and how has that changed after the inflation numbers have come out. So we'll come back to this, but right now the markets have moved back to just a 25 basis points in rate reduction in September. So the next meeting in September 18th, next month, and the markets are only pricing in for 25 basis points cut in September, and then a 50 in November, and then another 25 in December. That's what the markets are pricing in at the moment. Yeah, so bouncing back up, and I feel like this is a good / bullish report. So there is possibility for some momentum intraday for us to see that continuation. And I think that is something that can create more opportunities on a day trading perspective from the market. Volatility getting crushed down now under 18 at the moment. So down to 1.7% lower. Caddy, please sell some of your Google shares so I can buy some, at least keep it steady. No, I'm actually going to keep buying Google. I feel like there's a lot of potential opportunity for that. Coming over Vault, why do you think the market reaction is muted? Dollar had some volatility but stable now. Futures no reaction rather. Why is that? I do believe that. I think yesterday's momentum, yesterday's price action on the back of PPI already had priced in some of this report. Not all of it, but I would say some of this report was already priced in from yesterday's rally. Because, between PPI and CPI, PPI is never a market-moving catalyst to begin with. It's not a catalyst that actually moves the market. It's usually been CPI. And since PPI numbers came in so good yesterday, the markets already were very, very optimistic, very bullish on today's report, and they already priced all that in yesterday. So I do believe that we did see a bit of a muted reaction from the markets because a lot of it was already priced in from yesterday's report. So hopefully that makes sense. Folks, do me a favor, drop a like on this live stream. I would really appreciate that. And also share this with your family, friends, investors, traders, other communities, groups that you are part of, that you can, of course, have more people join us, have a more engaging, more lively discussion around the markets and, of course, all these numbers that are coming in. So yeah, that's where we are with these numbers. So whether holding Google for the long term, so not really holding it for a swing trade, but holding it for the long term. It's really just leveraged ETFs that I like to trade on a daily or a weekly basis. So a lot of that is going to be determined on where we are with the Moneyvest dashboard for different values and different indicators that I'm watching. So it makes a lot of sense to day trade and swing trade those ETFs. But from a investment standpoint, I do look at these companies like Google, Microsoft, Tesla, Nvidia, even companies like PayPal or Enphase, all the companies that are in part of my 37 stocks and ETFs watch list. A lot of them are long-term holds. A lot of them are long-term positions. So recent developments with DOJ wanting to break up Google. I think that's a catalyst that we have seen many times over. The Department of Justice or the Federal Trade Commission, Congress have all wanted to break up Meta, Amazon, Microsoft, Google. I mean, these are companies that are constantly going to be scrutinized for the monopoly that they create. But at the end of the day, I just don't think there's any legal basis to do that. They're companies, there's a lot of competition. There's a lot of competition for these companies. Of course, they're going to try to spin that in a way that, it makes them seem like they're a monopoly and they don't have any competition. But at the end of the day, like, they do have significant competition in the marketplace. So I don't think that has a lot of weight. This has happened before. It's not the first time. We've kind of gone through this similar process of the DOJ, FTC, like all of them trying to or want to break down a lot of these companies into separate businesses. But I don't believe that's going to take place. That's going to happen. Even if it is, it's going to be a very, very, very long process of how to divide up assets for such a large company. So in my opinion, until further developments, I don't expect that to be a reason why Google does not perform well. Okay. What are your thoughts on ASTS earnings after the close today? This thing has been a rocket ship, so let's take a quick look. And we're gonna quickly do some very technical analysis on individual stocks that you may want me to analyze. If you want a more fundamental outlook on any company, you can go over to our website, our Moneyvest.com platform, and quickly take a look at any company, like for example ASTS. There's going to be a Moneyvest M score that you can access and take a look at right now, 3.24, and then of course do your full analysis on this company. Take a look at fundamentals, and everything else is going to be available on the Moneyvest platform. So we're not going to spend too much time on the fundamental analysis, but from a technical perspective, yes, I can share my 2 cents on most of these companies that you guys want me to analyze. So we got an extremely overbought, huge resistance here at around $24, $25. 5.6 billion in market cap, very overbought on the RSI and the MACD, as you can see on the significant momentum higher from $1.86. I mean, this stock since April has just ripped almost 1,000%. So that's incredible. It was going to be, 5 billion market cap? Yeah, at one point it was 500 million market cap, and now it's over 5.6. So 10x increases, pretty low share count. I would be very careful going into earnings, as it seems to be incredibly overbought. CrowdStrike, we have done an analysis on in the past. I feel like it's going to take some time to stabilize in terms of its business model and the extent of the IT outage and what that's going to do to the overall business. Support level at $202. It is oversold on the weekly and on the daily time frame. Starting to move back higher a little bit. We actually did see some institutionals stepping in. So L3 Banker Oscillator signaling a little bit of that buying momentum, and resistance all the way up to as much as $279, $280 for CrowdStrike moving forward. And let's see the market's reaction coming back up very, very nicely. There's momentum stepping back in for SPY and QQQs. Let's take a look at the treasuries. Still negative, still down 11 basis points in the negative. Yield curve is still inverted at the moment. And let's take a look at VIX Central to better understand where the contango percentage, negative 0.58%. So we're still in backwardation by just a small amount, according to the VIX futures. And as soon as that turns back into contango, we should be pretty good in a nice, healthy, uptrending, stable market. And also the spot VIX has come down so aggressively, right? I mean, it used to, it was, of course, as high as 20, right? At one point over 65, of course. But now you'll notice that it's come down to 17.6. So really, really low reading. I mean, it's just crazy how quickly volatility is crushed back down. I mean, this is incredible. From just a few days ago, from 65 down to 17. 73% sell-off in volatility in such a short period of time. Absolutely incredible. Okay, let's see. Let's take a look at NVTS. Let's cover Dell first from a more technical perspective. Again, you can take a look at all these companies fundamentally on the platform. But coming over to the technical analysis, Dell was in a bit of an uptrend for a really, really long time. Then it started to break down. Mark out that support here around $87, $80. Seems to be pretty oversold with the R side of the MACD. And we got a resistance. First level of resistance is going to be sitting right there at just under $100. So just under $100, it's going to be that resistance all the way up to as much as $132, $133 for Dell. And support level at $87, $80 for this stock at the moment. Palantir, we've already analyzed on the channel before. Disney, we've analyzed. Richie in the low 100s is where I believe the resistance is. Back up to $103. We got a support sitting right here inside this green rectangle at around $84, $85. Chipotle, lots of support here. Been validated a couple times. That's going to be sitting roughly at $40, $49. And I would say a resistance right now in the near term sitting as high as $54, $55. A couple times we've gone rejected at that level for Chipotle. Let's take a quick look at Ulta. And Ulta, I feel like there's a couple of companies, Ulta and Lululemon, that have just been destroyed over the last couple months here as they continue to get sold off. Got a very oversold stock here, trading pretty much near support levels and demand. I feel like it's got a pretty high rating on our Moneyvest platform. So Ulta Beauty, we've got 3.88, really, really high in terms of the quality of the business. So this is a stock that is worth looking into from a long-term perspective. Analyst estimates for Ulta: hold, 16 hold ratings, 12 buys, high target of 579, average of 478, with a compounded annual growth rate of just under 10% for Ulta Beauty. So that's going to be a very, very strong potential growth for Ulta. King Mas, thank you so much for the donation. Can you cover Meta and Apple? Do you think the market sells off or goes up? So the latter question that you have, it's anybody's guess, in my opinion. You know, there's not my guess is just as good as yours, because nobody really knows at the end of the day, like, what is the market going to do. And our job really is to understand the risk reward and how well can we take advantage of that market volatility. So there's going to be a lot of indicators that I share during market open hours with our community, with respect to the contango level, VIX futures, volatility reading, market breadth, Moneyvest index, and all that's going to help us understand where we are from a technical perspective. So this is the overall chart that I shared in my previous video. Make sure that you do check that out. This is still within the context of a lower high and lower low. And the reason why this is so important is because if I bring over, this chart here, let me just bring it over here. So this is the Moneyvest dashboard, as you can see. And right now what we have here is a lot of red and yellow. So if I simply plug in the contango level, which is negative 0.41, so that's going to be this, 41, it's still in red. If I come over to volatility, so VIX 17.57 here, now we're in the under 50 percentile, so we're below the median value. And then if I look at PCC, right, so that's the put call ratio. Right now, we were sitting at 0.96 the last time I updated this number. I think the markets haven't opened yet, but we are still at 0.964. So that's where we are. And again, I can update a lot of these numbers, and the color codes will really tell you how risk on or how risk off you need to be in this current market environment. So for example, if you drop down to 2 on the Moneyvest index, we go up to as much as 60. On the VIX value, we go up to as much as 1.5. On the PCC, we go down to as low as 10. On the S&P 500 stocks trading below their 50 and 200 SMA, we go down to, let's say, 8 for this. And now you'll notice that everything started to turn green, right? Everything is green. So that's why it is color coded. This greenery on this Moneyvest dashboard represents buy. It is a signal for me to start buying into the market, because this is an environment where the risk reward is very good. There is rarity in this environment. Volatility at over 60 was rare, hence flashing green. A lot of percentage of stocks trading below their moving averages, flashing green, right? It's good risk reward ratio. Markets are oversold. More puts compared to calls in the market. That means institutions are hedging, and every time that's happened, the markets are already in some type of crisis and selling pressure. What does that do? Flashing green, right? Those are buying opportunities. So that's what this is for. This is to help us better understand how good the risk reward is in the market. But this is the current situation. You'll notice most of them are red. So for example, if volatility drops down to 10, right, it's now in the 0.77 percentile. Even lower, right? Let's see that this number gets up to over 75 or even 85, right? Gets up to over 90, right? So this is, let's say, over 92 as well. This is, let's say, at over 0.6. And the Moneyvest index, let's say, goes up to 4.5. So now these are becoming incredibly red, right? So these are all red, flashing red, meaning that we have to be cautious. We have to be alert. This is an environment for me to sell calls. This is an environment for me to start raising cash. This is an environment for me to be very, very alert for a market sell-off. So once again, it's all color-coded. It's going to help you better understand where we are. But coming back over to your question for Meta and Apple, I can analyze. Let's take a look at Meta. And this right here is the overall analysis for Meta and Apple. We've got resistance coming up for Meta at $540. RSI, MACD, L3 banker oscillator, everything starts to look good. And that is going to be that resistance at $540. So that's going to be the level to keep in mind. And for Apple, I've got a resistance up to as much as 225. So there is momentum for Apple, upwards of 225 and a support at $220. But I do also believe that at some point we're going to start to see that momentum fade and really just consolidate sideways or start rolling over a little bit. So 225 is going to be that resistance to watch for Apple. So Volt, nothing really. I just feel like if I don't buy now, I feel like long term I'm going to regret not having more Palantirs. So we'll continue to dollar cost average when I feel that, the price is relatively okay. But at the same time, I think everyone needs to understand that Palantir does trade at a pretty expensive valuation at 100 times almost 28, almost 30 times sales. It is an expensive stock. So I wouldn't necessarily make Palantir my entire portfolio, but I think a small allocation or even a medium-sized allocation is warranted if you are somebody who understands the business and are bullish or have conviction in the company long term, and also at the same time are okay understanding the valuation is high. Because if $30 today was trading at around 20 times earnings and 12 times sales, I would have seen myself building Palantir into one of my biggest positions. But because there's valuation risk, there's always going to be that valuation risk when something's trading at over 100 times earnings and over 28 times sales. It makes for a bit of a difficult call. So that being said, I don't mind buying Palantir in the small quantities here, dollar cost averaging a little bit here and there. Last time I picked heavily was last Monday, of course, in the low 20s. Those shares are already up over 44% from those lows. So I don't mind picking up another small batch in the 30s. Kevin, I'm colorblind, so it doesn't help me. That's okay. If you're colorblind, then of course you're already part of our Discord. I'll be sharing all the updates and in more written detail where the risk reward is good, and of course whether I'm buying, selling, or holding, selling puts, selling calls. All that's going to be discussed on our Discord, of course. But yes, that's the whole idea, to help you better understand when these indicators, these very important indicators, are flashing green versus flashing red versus flashing yellow. And it's helped us tremendously over the years because it is what's worked. We've talked about when the VIX is high, it's time to buy. It's not for any non-analyzed reason. We've looked at this, we've analyzed it. Kevin's edge is buying when there's a lot of fear, and that fear can be spotted when volatility is high. So if you understand those things long term, I think it's going to be very critical information. I remember talking about this long time ago, before the VIX even spiked. Let me see if I can bring up that post, which that's kind of like the reason why I started doing analysis on this in the first place, is because I knew that there was definitely a reason. There was definitely something that we can extrapolate from volatility. Volatility has always been one of our very, very important indicators. And I only go over VIX, but there's a lot of other indicators related to volatility, related to VIX, that I think are super important. So let me see if I can bring it up, because it is from a long time ago. We were talking about it. Let's see. Just give me one more second. If I can find it, great. If not, then... Yep, so right here. Okay, so I'm doing some research on VIX and has some historical levels, but for the future references and as a rule of thumb to follow and understand, the risk reward to buy DCA is best when VIX is above 20, 40, 60, right? So specifically, these levels were pointed out, 20, 40, 60. Risk reward gets better as 60 over 40 over 20, meaning the higher it goes, the better the risk reward becomes. S&P 500 is over 20% down from its all-time highs, and over 90% of stocks are trading below their 50, 100, 200 simple moving average. Keep these two levels intact forever until stats change. This will continue to get updated as years go by, but VIX has spent 91% of the time in the last 34 years between 10 and 30 levels. So the moment it crosses those two important thresholds, 40 or 60, it's time to do something, right? So we were at 21 back then. And then I also mentioned here, long positions are on. This is October 2023. We all know what happened in October 2023. If you come over to, let's say, QQQs, I believe this is October. This is November and October right here. So October 2023, we were at some point for the NASDAQ down over 10% from all-time highs. So October 23rd, 2023. So that's the date. Come back. Take a look. Long positions are on. This is October 25th. VIX is over 30. Percentage of stocks trading below their 200 SMA, less than 15%. S&P 4000 down 15% from all-time highs. So that's where we are. And that's why it works. That's why it literally works, because we've back-tested this. We've understood this over the years, that volatility is a measure of fear. When fear is at its peak, that's when rational investors, long-term investors, need to take advantage of that. Okay, Frank says there are better value plays in the market other than Palantir. I agree. Palantir can be overpriced for many people. So there's no doubt, obviously everyone has to figure out what risk reward they're comfortable with. And Palantir for many people can very much be overvalued. So there's nothing wrong with that. And yeah, if you have any other suggestions, Frank, I would love to know what other value plays you see for other stocks on the market. So Roshan, the Moneyvest index isn't there for a specific stock, although it can be created for specific stocks. But that requires a lot of data science in terms of analyzing a lot of data. But it can be created, to be honest. And the reason the way it's going to be created is looking at historical prices for individual stocks, moving averages, how much time it's spent above, below moving averages, as well as the volatility for individual stocks. So looking at implied volatility using the options chain to create a VIX for individual stocks. So for example, we've got VXAPL, I think. So that's the volatility on Apple stock. So if you take a look at this is volatility specifically tracking Apple. This is Apple stock's volatility. And last Monday, it was as high as 50. So we can extrapolate a lot of data from this and create our very own Moneyvest index for Apple. And it's going to create a very nice reading between 0 and 5 to then understand, whether there's buying opportunities for Apple or not, how favorable it is. So we can create that. We can do that for a lot of individual stocks, but it's going to require a lot of data science, a lot of statistics, and a lot of data for us to analyze. So right now, the Moneyvest index is only geared towards the overall market. Gives us an index reading for S&P 500, and of course, it can be applied to NASDAQ as well because they're very highly correlated to each other. But yes, there's a lot of ideas. There's a lot of ideas that we can focus on because there's a lot of data available. So maybe in the future, every stock will have their own Moneyvest index where we can look at it from a trading perspective, from an investment standpoint, that if the Moneyvest index is flashing green and it's a really low value, then it's a buying opportunity. And versus if it's higher and if it's flashing red, then we can be more careful. Okay. Yeah, last October was a generational buying opportunity. I feel like every October is a generational buying opportunity, Kevin, because the markets in October tend to be really, really low. I mean, September for the last 4 years, 4 Septembers in a row have been red for the market. And I think 2 consecutive Octobers have been buying opportunities. So if you essentially look at this was October 2022. This was October 2023. So last 2 Octobers have really been buying opportunities. And this right here was October 2020. So 3 out of the last 4 Octobers have been buying opportunities for the market. And September, 4 out of 4 times last 4 years September have been pretty brutal. So is this October going to be pretty bad as well? What do you guys think? Is this October going to be also pretty bad for the market? Yeah, CPI print bullish, just logged on. So I would say it's somewhat bullish. Markets have recovered pretty much to being green pre-market right now. And we got the inflation numbers. Overall, they were good. They were better than expected on the headline CPI. Everything else was on par with expectations here. So not bad. Not bad. So what are you guys doing? Are you buying, holding, selling calls, selling puts, buying calls, buying puts? Share your trade idea with us for this week. I want to know so that other people can also engage and get ideas for this week. What are you doing? Are you buying, selling, holding? If so, what is your trade of the week? What is your trade of the week? What is that one trade or one stock that you're buying or one investment that you're making, one trade that you're taking for this week? Whether it's options, regular, let us know. Yeah, October is okay during election years. Election years in general, the Q4 tends to be very, very strong. Stefan says, October 14th, my birthday, please crash. This year, the FOMC is on my birthday. FOMC meeting is literally on my birthday this year, November 7th. November 7th, 2024. And that's also the week during when we have the elections in the US. Very important monetary policy report. So I feel like it's going to be a pretty busy birthday for me. Election, FOMC, lots to discuss, lots to unpack during that time. And the earnings season is going to be going on. Man, it's going to be pretty busy around that time. Okay, buying SVIX, ELF buying, bought 70 stocks for Chipotle, up 121% on Palantir. That's incredible. Apple 215 puts for next week at $1.25. Good risk reward. Buying DPST for this week. That I think is the defense, right? Or no, regional banks. Yes, I remember regional banks. Regional banks. NVIDIA, SOXL, just looking. CMG at 50. Frank says watching ASTS earnings, buying the dip if it happens. Holding if the market goes up. TQQQ to sell. ELF booty. So a lot of people trading Chipotle, ELF, and then of course some volatility ETPs. And of course some leveraged ETFs like SOXL and TQQQ. Oh, Vin says my birthday's on the 5th of November. Man, you're my birthday buddy for the same month. Yes, I'll be turning... does anybody want to take a guess? How old will I be turning in November? I just want to see if you guys think that I'm older or younger for what I look, for the way I look. Omesh, thank you so much. I appreciate that. Sold 3 CSPs on ETFs, buying VOO. That's great. Yes, I think CSPs, it's a good opportunity to sell cash good puts because the way the markets are moving, momentum's high. The probability for them to close out of the money are going to be very, very high. So for example, the NVIDIA puts that I sold up over 67%. So 67%, I'm going to be closing out that trade very, very soon. Mukunda says 33. 16. Ankur says, oh God, putting me in my teens again, huh? 31. 45? Really? You think that I'm 45? Johnny says 28. I've been watching for 3 years. I believe you were 25 when I first started. Guys, there's some people expecting me to turn 36, 39. Like, seriously? Some are just too young, like 16. I wouldn't even be allowed to trade if I were 16 without my parents' consent. My mother's December 7th. Nice. No, wait, November 7th or December 7th? The answer. 25, 25, 25, 24. Man, I wish I was in my low 20s again. Would have definitely made some different decisions, but no, I'll be turning 28. A lot of you guys who've been part of our community for a long time guessed exactly right. Kevin got it. AC Queen got it. Johnny got it. Piyush, melanated, 28. Yes. ENDL, what time does CPI start? CPI starts about 47 minutes ago. So we already got the CPI report and we came in better than expected for headline CPI and then on par for everything else. So versus prime marriage age. Yeah, no, 28. Looking forward to it. So pretty excited. What? I'm turning 25 soon. You're so young. Yeah. Arranged marriage mode. What different decisions? I feel like in my low 20s, I feel I did waste a lot of time, even though like I didn't, even back in college, like I did focus on sports. Like I used to play soccer a lot and then I used to, of course, work. But I could have just spent more time focusing on those things, I feel. But yeah. because I've kind of realized over time is that the more you front load your life, the better off you're going to be long term. It's either, make your hard choices in your 20s and your 30s, and then you have a much better and more easier 40s, 50s, all the way to retirement. Or of course, you just sort of make not the best decisions and not the best use of your time in your 20s and 30s, and of course, work for the rest of your life. Because really, once you've got that base built up, then it's a lot easier. You got more freedom, more choice, more optionality. Feel like everything is discussed in our psychology course already, but those are the things that I would tell any person in their 20s, including myself, to take advantage of the time that you have now. Sure, you got to have a little bit of balance between things, but I feel like a lot of if you look at some, it's kind of an interesting discussion because a lot of the wealth and a lot of the success is created by being more imbalanced in certain things. When you're kind of all in on certain things and more concentrated, that's when you're able to exponentially grow. And at some point, then it kind of moves more towards diversification and balancing everything out. But yeah, so yeah, that's how I think. So I'm a doctor at 33, but you're definitely smarter than me, Naman. So I really don't consider like this smartness or knowledge to be anything more or less. You definitely know a lot more about a lot of things in life than me. So I feel that's why I wanted to create this community, is that we can all learn from each other. I don't never consider myself to know more or less than anybody else. It's just that you have experience about different things in life and you've got a different perspective. You are an expert in your own field. And that's what you can share with the world. That's what you can enlighten us with. That's what you can help us understand and we can learn from. So it's just everyone has different perspective, different things that they can share. And that was literally, not even kidding, was the only idea behind this community, is that I wanted to create something that we share collectively. And we've got a community of like-minded people that can learn from each other. So that was the whole inspiration for this Discord community that we built. So you wish to spend more time on sports or less? More, I would say more time on sports and also in my work, and I feel like learning. Although I did spend a lot of time, but I just feel like I could have spent more time. Caddy is an old soul. I am. Like, I seriously am. If you really get to know me, you'll know very quickly that I'm 50 inside, to be honest. Might look 28, but I'm definitely 50 or older inside. But balance is the key. I agree. I need to get out of the house more often. Anyway, so coming back over to the market, so about 15 more minutes left for us to see the opening. QQQ's up, S&P's up, Nvidia, Tesla, everything pushing higher really nicely. So pre-market, we're seeing some momentum coming in. And yeah, overall inflation numbers coming in pretty good. Better than what the expectations were. So Kim says, trust me, you're not 50. Well, I hope not, but sometimes I do feel like it. For it, no, not really. Think consumers are being price grounded. PPI came in way lower than expected, but CPI barely moved down. Yeah, so Tara, I think that's a good point. That's a very, very good point that you bring up that I forgot to mention, and that is that if PPI comes in better than CPI, prices are lower on wholesale side, but they're still higher on the retail consumer side. That is a big discrepancy, and that just goes to show that companies still have pricing power. They're keeping prices higher for a reason, and that creates what? So what is the difference that we call between PPI and CPI? If PPI is lower, CPI is higher, what does that difference call? What does that difference mean? Let's see who can tell me. This is a very quick pop quiz for everyone. If anyone can tell me what that difference represents. If PPI is lower and CPI comes in a little bit higher. So what's that difference between the wholesale prices and the consumer prices? What does that difference represent? Sanji says, man, trust me, being married is like your daily VIX level at 65. So Tara says greedflation. Yeah, profit. Profit, greedflation is a good way to put it. Corporate margins in general, corporate profits. So that's really, pricing power from companies. They're not lowering prices. They're keeping them where they are to the end consumer. And wholesale prices are coming down. So raw materials are costing less, but the end use prices are still elevated. So that is pricing power, price gouging, whatever you want to call it. But that does lead to higher margins. Now, it's kind of like one of those things, right? If you are a consumer, that hurts you. But if you're an investor, it's still good for you because that means companies are making more money. That means higher earnings. Higher earnings leads to higher growth, which leads to higher returns. So sometimes you've got to look at things both from a consumer and an investor standpoint. This has happened to me a lot of times. Like I've used Adobe my entire life. Adobe as a consumer, I don't like because they're raising prices every year. I mean, I remember I used to pay like $20, $30 a month, and now it's upwards of $60 a month that you're paying every month for their applications, for their suite of applications, Premiere Pro, Lightroom, Photoshop, everything. So as a consumer, it makes a little bit kind of frustrating, right? That you're paying more every year. But as an investor, you kind of understand that, okay, they have pricing power. Like I'm not canceling my subscription. And I'm sure a lot of people like myself are not canceling because they're so used to Adobe's ecosystem. It's a very sticky business model. And so as an investor, it's a pricing power model. And so they're doing well, right? They've got good revenues and profits and all that stuff. So consumer, yes, maybe a little bit frustrated. Investor, not so much. So Mike says, yes, very true sentiment you expressed, though. Front load your pain early on and you'll be able to enjoy so much more later. Think of all the resources you have to enjoy when your chronological age catches up to your financial knowledge age. Yes. So I also agree. And at the same time, like there has to be some balance because, there's a book called Die with Zero, which I think is a very, very good concept where there are certain things that you can only do when you're young, right? You can't go skydiving when you're 60. So if you ever wanted to go skydiving, and if it's in your bucket list, those are things that you can obviously do when you're able to do it when you're much younger. So you got to plan, in my opinion at least, plan in a way that you are making the right choices. Time utilization is really what matters most, right? So you've got good positive habits to utilize your time. You're disciplined in your way where you're spending your time with people that you really care about, love, want to spend quality time with, and in your own personal development. But at the same time, you're having a good balance to enjoy things that you want to while you're able to do that, right? So, and that's can get very subjective and also definitely we can talk about it for days, I feel. Shelter CPI has fallen for 16 consecutive months from 8.2 down to 5.1. Kim says, sure, you can go skydiving when you're 60. Okay, I guess you can. Sometimes. Maybe you can, yeah. Do they let you go skydiving after a certain age? I don't know. Mike, that's great. That's great. That's definitely, I mean, of course, if anybody's able, of course, anybody can do it. Just becomes obviously a little bit more difficult. Snowboarding, skiing, all those things. Okay, so coming back over, QQQs still up 19-20 basis points. S&P 500 up 14-15 basis points. Fresh cut, thank you so much, Sus. Really appreciate that. 2.9% inflation, really low enough to give the Fed enough confidence to lower interest rates. So let's just come back here to take a look at the different to leap. So what price would be good entry for NVIDIA? I think in the low 90s. So $95, $96 would be good price for NVIDIA. That's where I picked up last week. And I think that's a level there where I feel comfortable buying more shares, even though, again, it trades at 35, 30 times earnings multiple. And this right here, of course, is going to be the interest rate expectations. So markets are still pricing in for another 25 basis point cut coming into September, and then 50 in November. When it comes to yield curves, Kevin, so we are still negative by about 11, 12 basis points right now, down about 30% still. We were barely in the positive territory, getting up to over 0.002%. So, Mike, if you keep yourself in shape, you can do anything. Absolutely. Fully agree. I think it's really important to keep yourself, of course, healthy. Health comes first, right? Your sleep, your body, mobility, stretching, everything as you progress. I think that's the most important thing. And of course, you can do anything if you keep yourself in very, very good shape. So again, so yield curve, we were barely positive for a very, very brief moment, and we're back down in the negative 11, 12 basis points at the moment. So another 10 more minutes for the markets to open here. Thoughts on NVIDIA tonight. So why tonight, Aaron? The earnings are not coming up until next week here, or even the week after. The 28th, I feel like, is when the earnings are. So yes, Wednesday, August 28th is when NVIDIA earnings are coming up on our platform. And there we go. Wednesday, August 28th. So Visa versus MasterCard long term, I would pick Visa. I think Visa is much better, just from a quality of the company standpoint overall. I think it's, in my opinion, much better company overall. So 90s, it's kind of hard to say if NVIDIA is going to be trading back to 90s or not. But at some point, we were down over 30% from its all-time highs. From highs of about $141 down to as low as $90. That was a 36% sell-off for NVIDIA. And it's kind of funny because I did have cash good puts sitting at $90 strike. So $90 strike was the level we were talking about for NVIDIA, of course. And that's a CSP that I still have. And then, of course, I picked up on Monday morning around $90, $91 a share. So it's kind of hard to say. Very nice recovery back up. RSI, MACD, L3 banker oscillator, everything starting to move back higher. And support level is going to stay up roughly at 117 for NVIDIA. So I thought this report would pivot the Fed to 50 basis points. 25 isn't going to do anything with helping the economy. Might hit the fan early next year. So you still don't know. These numbers could still get updated. This is the interest rate futures, and they could still get updated to price in a 50 basis point cut. But eventually the idea is the markets are expecting for more rate cuts as time goes on. So, right now 25 basis points, but of course over time we are expecting for interest rates to come down, whether it's 50 or 75 or 100 basis points. We are expecting for these numbers to roll over. C Limited, hold or sell. I think it's a company that's still not profitable, I should say, from a fundamental standpoint. So let's take a quick look. C Limited here. Yeah, I feel like 2023 is just barely profitable by up over 1% in net margins. And we are still, I think, significantly lower from its all-time highs. So we got a resistance here at $92 and a support level right over here at 35. So that's a lot of consolidation sideways in that range. If you are looking to get out of this one, $92 is going to be that resistance to keep in mind for C Limited. We've gone rejected there a couple of times in the past, but the company is also turning towards profitability. If you take a look at valuation, we don't have one yet because of the lack of profitability, but it's traded almost at 1,400 times earnings in the past. So I think it's very, very important that we remain cautious with companies like these. 43 billion market cap, revenue last year of 13 billion. So that's just over 30 times sales. 30 times sales, also very, very high. So Spotify up 127%. That is incredible, AJ. Congratulations on those returns. A very, very nice V-shaped recovery back up. It's coming up to that resistance here at around $379. So that's going to be a resistance to keep in mind. Nice, consistently growing revenues, but lack of profitability. Although last couple of quarters, it's done relatively well. And valuation-wise, we've got 130 times earnings, a little over 4 times sales. So I would start with selling calls in 380s. I think that would be a reasonable premium that you can capture at $380 as a resistance. That's a nice strike to pick if you are selling calls against your shares because you are up so much and you can generate some nice premiums for Spotify. Applied Materials Vault. I do like Applied Materials a lot. I think it's a fantastic company. And overall, very nice uptrend. I really do like Applied Materials along with, ASML and Lam Research, Qualcomm. We got NVIDIA and AMD, of course. So overall, been on a very, very nice uptrend. And I'd be watching a support at closer to 154, 155. So that level right there is going to be the confluence between previous resistance acting as a good support and a nice little horizontal support as well for AMAT. Mike, do you have any crypto? So I only have a little bit of IBIT. So IBIT, don't have any crypto like Bitcoin or Ether, but only really have some IBIT, which is the Bitcoin ETF. Yes, ELF we've also looked at trading near its intrinsic value, I feel. So ELF Beauty. Coming down. This right here would be it was a bit of a higher low. And then of course we broke down. And now support level is going to stay put right here inside $130 for ELF. So any reason for IBIT, not other ETFs? I mean, they're all the same. If you were to pick any, but I looked at IBIT and their contribution for Bitcoin Ether was much higher, and it's also from BlackRock, or I should say iShares. So definitely a very reputable issuer if you're looking for ETFs. With ETFs, I think it's really important. If it's a non-levered ETF, then maybe there's some flexibility. But when you're looking at leveraged ETF products, look for good issuers. Look for companies that have been around for a very long time. You don't want something that is not going to be around for a long time. That's why, when I'm looking at FNGU and I'm looking at SOXL, these are ETFs that you really want to be very careful when you're trading them because they're leveraged and there's a possibility for them to not be around if you're holding for the long term. And there's the factor for decay. So I think it's really, really important to be careful with leveraged ETF products. All right, everyone. So a couple more minutes for markets to open here. QQQs are slightly up, more or less flat after the CPI numbers, and S&P 500 also just about flat pre-market. Currently living in Philippines, of good international stockbrokers. So might check Interactive Brokers. I think Interactive Brokers should work. They're pretty global. We've also got a broker list in our Discord. So if you come over to Discord and you come over to our broker list right here. So this is a channel that we have created for everyone, and this is all the recommended brokerage platforms that all of our members use. So we've got the United States, of course, we got the UK, India, Australia, Canada, Singapore, Malaysia, Romania, Hong Kong, Israel, Netherlands, Switzerland, Germany, Uruguay, and there's going to be more and more countries that we add on as more people share what broker they're using or what broker they recommend. So, but I feel like Interactive Brokers is going to probably make the list for most countries, as they are pretty global and they are most likely to be around for a long time. Yeah, leverage ETFs are designed to go to zero over time, correct. And that's why they're only meant as trading products and never as an investment product. I think it's really important for everyone to familiarize with how they're constructed and how they work. So Eric, everything is already included in the Discord and the platform. So once you do sign up, you get access to all the Patreon updates, members only videos, as well as the Moneyvest dashboard, the Moneyvest platform, and the Discord channels with the trade alert. So it's everything that you can access under one umbrella. So it's up to you, of course, if you want to take advantage of those things or not. You don't have to, but it's all under one simple pricing plan where you can access everything. So, but that's a good point. I mean, if there's a lot of people that only want access to, let's say, Discord or the Moneyvest platform or specific things, just let me know, because I obviously want you guys to take advantage of what it is that you really want. So if there's a demand for it, then we can maybe work out a different structure where if you only want access to Discord, you only get Discord access and not the platform access or the Patreon access and things like that. So let me know if there's interest for segregation for different things that you're interested in. Mike, absolutely. Glad I could help. QQQ is up 34 basis points. We got SPY up a little bit over 22. Coming over to individual stocks here. So Nvidia rallying up the most, up over 1.7, now up over 2%. Netflix up 1.5. We got AMD up over 1.2. Amazon up almost 1%. Microsoft, Meta, Tesla all pushing higher. With FNGU up over 1.7 to $383. $383. Can you believe that? Kind of sucks. Got out of this way too early than I needed to, but it is what it is. 1.4% higher, so very nice momentum up. And then we got SOXL also pushing higher, up over 17% this week to $36, up over 3% on the day today. So very nice move to the upside. So that's going to be it for today, everyone. Thank you so much for joining in. I really appreciate that. Link's going to be down below if you want to join. Also pinned up top if there is a lot of interest for segregating those out a little bit further. I'm happy to do that. I'll share in my future videos all the updates. So once again, thank you so much for joining. Really appreciate you all. Drop a like, subscribe, and share these live streams and videos with other people. Would love to have more people in